thank you for staying with us. There are those who would say that the CBN's operational change to Forex market, to the Forex market, is not something coming to us afresh because we've been down this path before. Are we going to sustain it this time around? What does this mean now? Then the exchange rate wasn't as, how shall I say it, high as it is now. But here we are. Is this going to be sustained, or is there going to be another intervention of the CBN? What are the implications of this new directive that we are in now? Let's have this conversation with the founder and CEO of Center for the Promotion of Private Enterprise, CPPE, Muda Yusuf. Thank you so much for joining us, Dr. Muda.
Good morning.
This is one of the things that you and a few other economists, have been talking about for quite a bit. For those who are wondering, what does this really mean, unification of the Forex market in Nigeria? What does it really mean?
Well, what it means is that we are going to have a more equitable framework for the allocation of foreign exchange. A framework that is more transparent, a framework that we remove the unwholesome practice of round tripping and all the associated corruption around the foreign exchange market. Yes, on paper, we do say that the exchange rate is 460, 461. But the reality is that what percentage of the population have access to foreign exchange at 460 or 461? So when I see some headlines saying that the Naira has been devalued, the reality is that the operating exchange rate for the past few years is over 700. If you talk to any business person or even individuals or businesses, effective exchange rate is over 700. So if we have a unification regime that can make foreign exchange accessible at 660, will you call that a devaluation? I think it is better for everybody. Because
my apologies, Dr. Yusuf, just to be clear, what's the difference between what we have now, where the market is liberalized, and a situation where the Naira is devalued? What's the difference?
No, the difference. First, I don't like the word devalued. Well, it's an adjustment.
But it has happened before.
Yes, it has happened.
I mean, Nigeria's currency has been devalued quite a few times before.
It has been devalued.
So, what's the difference between devaluing the Naira and, okay, let's use your word, adjustment?
Because we are talking about a flexible exchange rate regime. You see, devaluation has a very negative connotation. It's as if the government deliberately wants to make the exchange rate weaker. That is not the reality. What the government is doing is to allow the rate to reflect the fundamentals of supply and demand. And going forward, it could get better, it could get worse, depending on what the fundamentals are. And when we talk about fundamentals, we are talking about factors on the supply side. If the supply improves, the exchange rate will appreciate.
I know that. I know that there are a number of issues that we're going to be discussing, but what Nigerians want is for the Naira to appreciate against any currency at that. There was a time in this country when the Naira was stronger than the dollar, even stronger than the pound. So now, what's the path to getting back there as closely as possible?
The path is what we have started now. Because the new policy regime will make for a better inflow of foreign exchange into the economy. What we have had before now is a situation where we depend almost entirely on what the central bank is putting in the market. So there has been a restriction on inflow of foreign exchange.
Doesn't that also make us additionally dependent on importation?
No. We are talking about ability to attract foreign exchange into the economy. It doesn't make us... I mean, if we export more, for instance, that is attracting more foreign exchange.
Just before we take flight on the discussion,
yes,
still on the difference in the semantics, liberalization and devaluation.
Yes.
You are saying that it's an adjustment. So, though in theory we're saying that the naira has crashed, but by implication it is really gaining in strength. Is that your position?
That is what I'm saying.
Okay.
Because if more Nigerians or more corporate citizens will have better access to foreign exchange at 660, they are better off. When we claimed that the exchange rate was 461, and they don't have access to it. And at that time, only very few privileged people had access to the 461. And to make matters worse, most of those who have access to 461 will take the foreign exchange from that official window and go and sell it at the parallel market window. So we had that going on for a very long time. And the system has created billionaires who are not creating any value. The phenomenon of which we call round tripping.
Okay, now let's get to the details now.
Yes.
So what does this imply for the various segments of the economy? Mawpe and Bukola have been talking about the implication on Nigerians who study abroad. That and a number of other, BTA costs and all those things. What is the implication of that? How is that going to help them or harm them?
No, it's going to be positive. Before now, we have an acute liquidity challenge in the foreign exchange market. And when I say liquidity, what I mean by that is ability to buy and sell in the foreign exchange market. That has been a major challenge. Talk to anybody who wants to either pay school fees abroad, who wants BTA, the kind of things they go through, and what percentage of them eventually even get the BTA or even access to foreign exchange to pay school fees under the current regime. So what we are saying is that this current dispensation will create liquidity, and what liquidity means that it will improve access.
But it costs more.
It will cost slightly more than...
It will cost significantly more, from 400 something to 600 something.
You see, that one is academic. Okay. I mean, talk to anybody. How many people are getting the foreign exchange at 460? How many people?
You were explaining liquidity. I want you to land on that.
No, what I'm saying is that this system will create liquidity. In other words, it will allow people, whether you want to import raw materials, you want to pay school fees, you want to even use your Naira card, you'll be able to do it seamlessly. Because there's liquidity in the market. And how this will create liquidity is that it will allow more for it. There are a whole lot of people, investors, that want to come into this economy. And when they are coming with dollars.
And in that regard, some are also enthusing that it will allow Nigerian students seeking this loan to take that Naira abroad and be able to exchange abroad instead of that stress about, exchanging and securing the dollar here at home. How true is that?
Well, I cannot validate that. But what I can tell you is that the current system, up until now, when has created a whole lot of distortions in the market. And what you are saying is possibly part of the distortions, because it's not transparent. And there's a whole lot of corruption around the foreign exchange market. It was almost becoming a new normal. That you want foreign exchange at 460, you have to know somebody, you have to bribe somebody, you have to have a markup. And I mean, it was destroying the economy. So more so that some investors have left the country. Because the whole system was so unethical that not many people were ready to continue to play in that kind of environment. So this is going to make the space it's going to bring a lot of sanity into the space. And in any case, floating the currency is not absolute. Nothing is absolute.
Because I imagine that should be, a possibility in the long term. Because if foreign nationals can bring dollar with ease, to trade in the local economy, why shouldn't it be the same for Nigerians to be able to exchange their currency conveniently when they travel abroad?
No, I don't see any difficulty in exchanging your currency when you travel abroad. The challenge that I know is that you cannot use your card. It was so bad, there was a time it was even using your Naira card was reduced to a maximum of $20.
Okay.
Then lately, the thing was even cancelled completely.
Okay. Just a quick one before we go to Abuja. There are those who also say that the implication is that Nigeria's debt burden rises as a result of this adjustment.
No, you see, the point is, again, that may be academic. If you convert your debt at 460, you have a lower figure. If you convert it at 660, you have a higher figure.
But that means we have...
That is external debt. But the reality is that if you are paying the debt as a sovereign nation, you are paying from your dollar account anyway.
So
it doesn't really matter.
Okay.
Because if you are talking about paying external debt, you pay from your reserves, which is in dollars.
Have an implication
but for academic purposes, in terms of recording it in naira, of course, it will go up.
But does it quickly also have an implication for debt to GDP ratio in the long term?
No, it will have, if you are computing based on the naira, of course, because the naira equivalent of the debt will have gone up by the proportion of the increase between the official rate and the new rate.
Positive or negative?
Exactly.
Well, academically it's negative, but in reality it doesn't really matter.
Okay. Chamberlain.
So, Mr. Yusuf, good morning. Shed some further light on this for us, if you will. Supply is at the base of all of this, and CBN was intervening in this matter because of the supply challenge. Now, if their intervention has been taken off, let it be determined by the forces of demand and supply. Do we take it for granted that we sorted the supply challenges such that we don't need to worry about CBN intervention anymore?
No, not exactly. The CBN still has a role to play in stabilizing the market. And that is the point I was making when I said that the flotation of the currency is not absolute. And nowhere in the world is it absolute. If the situation is degenerating such that you have too much of volatility, or the currency is losing too much strength, the CBN has a responsibility to intervene, because the CBN is in custody of the nation's reserves. And part of the things you do with the reserves is to intervene in your foreign exchange market, depending on the prevailing circumstances, depending on the challenges of volatility, depending on the challenges of depreciation. But you can do that only to the extent that you have the reserves to do so. But the beauty of the current dispensation is that all the obstructions and obstacles to supply of foreign exchange into the economy is being removed. Because how do you convince an investor to come into this economy and you are telling the investor that you have to exchange the currency at 460? So because of that policy, so many funds that should normally have come to support the supply side of the economy have not been coming in. Whether you are talking about foreign direct investment, you are talking about foreign portfolio investors, you are talking about even export proceeds. Many exporters are not declaring their export proceeds. Many of them are keeping it outside the country. Because the policy is that if you export, if you are bringing your export proceeds, the bank will convert it compulsorily at 460. Is that not even penalizing exports? So these are the challenges and the bottlenecks that policy has created.
So in terms of what this means for businesses, because if people take loans in foreign currency and then they had to pay back, there might be a challenge. I mean, I heard you also make reference to this that happened before, but we also do remember that in 2017, this contributed to the exit of one of the telecom companies. So what are we likely to see happen? How would you advise companies approach this scenario, for instance?
No, it is good for companies generally. It is very good for companies. But generally, and this is talking now within the larger macroeconomic framework, if you are running a business and you have a dollar exposure, in other words, if you have borrowed money in foreign currency, it is an extremely high risk, what you call currency risk or foreign exchange risk. Because if you are operating in an economy where your cash flow is in naira and your indebtedness is in dollar, then you are carrying a very big risk. So that is a business risk. So for anybody doing business, I mean, the lower your exposure in terms of foreign currency, the better. Except, of course, if the business you are doing here is a business that is generating foreign exchange, then perhaps you can get away with it. But if your cash flow is in Naira, and you are exposing yourself to dollar indebtedness, then you are carrying a very big risk. So that is a business strategy issue. So anybody doing business should factor that into his business, his or her business strategy.
Well, I think that would also include Nigeria, considering that some of the loans that we have taken have also been denominated in dollars. For example, the $800 million loan, which the Buhari administration tried to obtain from the World Bank before it left, it was denominated in dollars. Now, whether the Tinubu administration is also pursuing that is still very uncertain, but we know that the National Assembly gave its approval. What I'd like to ask you, Mr. Muda Yusuf, you seem very bullish about this. You have said on the long run, even though it depends on a number of factors, it can go either way, you seem quite bullish about what has happened. For some people, they express concern as to whether or not this are not too many pills at once. Fuel subsidy has been taken away. It is strongly import dependent. We're still importing petrol. But looking at the fact that we've now floated the Naira, we could see an immediate rise in the cost of petrol. Do you think that all of these reforms, are they happening too many at the same time?
No, I don't think so. I think these are some of the very critical reforms that we need to undertake. Because one of the challenges confronting the current administration is to fix the economy. And fixing the economy requires some very, very important and fundamental reforms. So reforming the foreign exchange market is very fundamental, which is one major step that has been taken by this administration. Reforming the oil and gas sector is also very fundamental, which is another major step that has been taken. And the reality is that there is no time to waste. So if we must, fix the economy, these reforms are inevitable. But we need to manage the process well, such that the shocks on the citizens will be minimal. Of course, there will be shocks, there will be pains, but there has to be complementary policies to make sure that the pains are not excessive. So these things are inevitable. Of course, you have other fundamental issues around insecurity. We have issues around rising fiscal deficit and all of that, inflation. All of these things are related. Because if we continue to run the economy the way we have been running it, the macroeconomic challenges will continue. We'll be short of revenue. You'll be falling back on the central bank to borrow money. You'll be borrowing more money. The debt service will be climbing and all of that. And we don't want to continue in that trajectory. So what is being done now is to move us away from that trajectory into a more stable and growth path. That is what is happening now.
Spoken about the macro level, but looking at the real, I don't want to say micro, but nano level, at the individual level, because as you've said, the shocks need to be managed in such a way that they do not kill the citizens. You didn't use the word kill, though. Looking more, do you think that do we have a real metric whereby we can measure what is really happening to the people at the very bottom level? You haven't mentioned the fact that this is going to have any impact on the price of fuel, which is one of the things that we just saw go up astronomically. What do you think is going to happen again? Do you think we should be expecting to see another increase in the price of fuel so soon?
Well, it is possible. I say that because before now, the bulk of the importation of the petroleum products, in fact, almost 100% of the importation of petroleum products was done by the NNPC. Now, the new phase of the management of that sector now is to open up the space for private sector players in that sector to be able to import petroleum products. In the meantime, That's pending the time when our refineries will come on stream, pending the time when the Dangote refinery will come on stream. So now, for the private sector players to be able to import petroleum products, they have to access the foreign exchange market. The challenge they have had up until now is that they don't have access to foreign exchange. So we are dealing with a monopoly situation, which has its own problems. But now we have more players, and of course, if they are accessing foreign exchange at about 660 or something like that, it is likely that the price of fuel may go up, but we need to look at the numbers. What is the price of crude? What was the cost of transportation and associated costs for us to be able to come to a very proper figure, and for us to be able to estimate what exactly the landing cost will be. But the government has a responsibility in this case, because when we are talking about moving the economy towards a market-led economy, there's always a room for government intervention. No economy is left to be entirely free in terms of being completely a market economy. No. There are instances of what you call market failure. So it is the instance of market failure that leads to government intervention. So it is for the government to look at the entire gamut of policies and to also manage the trends in a way that we don't allow prices to go completely out of hand. If there are charges that government needs to waive, if there are taxes they need to waive, there are so many costs apart from the cost of the importation of the petroleum product itself. Those costs we can tinker with those costs so that the landing costs will be much less. But government has a responsibility to also manage the situation so that we don't completely expose the economy and citizens to issues of market forces.
All right, well, while we are still at that, there are those who are also wondering, perhaps in reaction to what you just said now about the government at one level or the other still intervening. What does that imply? Does that mean that there are some ways in which the government will still intervene in this Forex issue?
Of course. I mean, the whole process of oil, for instance, comes in dollars, and it's in the custody of the Central Bank of Nigeria. So while we allow the market to interplay, the CBN also has some reserves with which it can intervene, depending on what is happening in the market.
Intervene in what sense?
No, intervene by also selling dollars. Because we are talking about supply-demand situation now.
But won't that bring us back to where we started off from?
No, certainly not. Where we started from is that the central bank is fixing the exchange rates. Where we are going now is to allow the market to determine the rate. That will ensure more liquidity because more foreign exchange will come in from autonomous sources.
But you know what you
So our dependence on the CBN will be less. But if there are shortages, the CBN has a responsibility to intervene.
In 2016, this is exactly what happened. And then, as you said, the CBN intervened. And then the CBN couldn't stop intervening anymore. So
no. We didn't continue on that trajectory.
Okay.
At some point, the CBN governor put a stop to it. Because at a point, the CBN was even buying dollars from the market. And the market was that robust. And the CBN was buying to beef up its own reserves.
And that's another key concern, Dr. Yusuf. The initial enthusiasm, about a new policy from a new administration. Do you see that this will be sustained in the long term? Don't you think that at some point,
another
complacency will set in and then we'll go back to business as usual?
No, certainly not. If the government is focused, and if the government is getting the right kind of economic advice, there's no point going back on this kind of policy. Remember at the time, it was even the vice president that introduced the I&E window when President Buhari was out of the country. Because even the CBN, for some reason, is not a fan of the market. The CBN doesn't believe in a market-led economy. So that is why I've been having all these obstacles, to to reforms and to the market. It took its suspension now for all of these things to begin to happen.
Okay.
One of the predictions that you made could be very worrying for Nigerians who are still grappling with the new pump price of petrol. And you have said that, this new exchange window could also elicit possible further increase in the price of petrol. Do you see the fact that domestic production commencing soon from the Dangote refinery providing some form of stability in the pump price?
Certainly. Any day, domestic production is much better for an economy because it makes you less dependent and you worry less about the volatility of the currency. So it's going to help. But in the meantime, the government still has a responsibility. I keep saying it. No system of economic management is absolute. If you are talking about a free market economy, it's not absolute. If there are challenges along the line, government has to find a way to intervene, to stabilize the system.
Dr. Yusuf, we have to round off now.
Yes.
But just a quick one. Micro, small, and medium enterprises are also in this economy.
Yes.
What does this mean for them? There are those who say, for some it's good, for some it's bad. What do you say to them? How does this help or harm the SMEs?
No, it will help them. It's very positive for them because the SMEs don't have connections. They don't have contact in the CBN to get. Some of them just need maybe $5,000, $10,000. They can't get it. Some of them need BTS. They can't get it because of all the problems that the formal policy dispensation has created. But this policy regime is going to be more transparent. It's going to be more open. And you don't need any connection to it. It's a free market. It's a market you just go and buy because we are talking about a market that will be, that you have better liquidity.
For another category of business people, some experts are saying that restricting FX from 43 items will be counterproductive. Do you agree with them?
Yes, I agree with that because if you are not careful, if you still leave the 43 items out of this equation, the forex demand of the 41 items or 43 items will put pressure on the parallel market. And before you know, you can begin to see another gap. So we must harmonize the entire thing. And we must also find a place for the BDCs in all of this. Because you talk about SMEs. Most of the transactions that the SMEs do, most of them do it through the BDCs. So we have to factor them into this reform. So that all these retail demands for FX, they can also deal with it at their own level.
Well, someone says we should bring you in 6 months to explain whatever the impact or influence of this will be.
No, I'm very optimistic that this is the way to go.
Absolutely. Thank you so much for your time this morning, Dr. Muda Yusuf, is CEO of CPPE. Thank you again for your time.
Thank you very much, my pleasure.
All right, we're back after now to take on another issue, also in the news. To stay with us.